Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Tuesday morning pre-market webcast. Okay, hope everybody had a great long weekend. Looking at a daily chart of the S&P E-mini index futures, and what you see is that in the Globex last night, we went ahead and made another new high up at 2,006.25. And what I was telling my members last night in the subscriber webcast was what we've seen the last 4 to 5 sessions is, a bit of a choppy, range-ish, sideways to down kind of a trade. You made the highs here at 2,275. You ground sideways to down to get down to 87.5. Then back up to new highs. Bears blew it again. And then, just kind of sideways, you printed, essentially a doji on Friday. And now you're seeing new highs again. You're breaking out over this area. The upper band is way up there at 2031.5, but it's not unreachable because what's happened now is we've worked off again a lot of this overbought condition, and that's what this uptrend has done. So if somebody comes out today and tries to explain to you that this market is straight up, tell them no, it's not. You're absolutely wrong, because what we've had is we've had an initial squeeze, then we had a drop, we had a pullback, and a decent sized one. The fact that it happened during the span of one day doesn't really matter. It goes from 61 down to 37.25. Then we have another 1, 2, 3, 4, 5, call it 6 days, up to 2,275. We go down, get new highs, and now new highs again. But this is not straight up action. This is sideways action, and this works off a lot of that overbought condition from these 6 days. So, are we looking at another leg up? Most likely, yes. The only thing that's been able to knock this market down is news, and not news out of Gaza or news out of Iraq or anything else. The only thing that knocks this market down is the Ukraine. And that's why every bear on the planet, every time there's a Ukraine headline, they get it out on Twitter and anywhere else and in front of anybody's eyes they possibly can, because it's the only thing that can knock down the market. And even then, it doesn't knock it down for very long. So the Ukraine news blips have been buys. The only thing that's going to sustainably knock this market down is something very serious or unexpected out of the Fed, or something serious and unexpected out of the Ukraine that has teeth. Absent that, in a vacuum, this market trades higher. In a vacuum, this market has traded higher for more than 2 years. So to expect it to do something different is not really, it's not very reasonable. Expect the market to do what the market's been doing, because that's usually what the market will do. So where are we? We were long down at the lows. We exited that here. We got back in the 40s here, in the 43s. We exited that. Now we were long 91.5. We got out of some of that up above 2,000 on Friday. Then I added on the dip, and so right now we're long just under 94. So we've taken some profits from that. I've got a runner on with a 94 stop, and I'm just going to let this work. And if by letting this work, we drift up to the upper band or we make some strong moves, I'm just going to let that work. I'm going to let that trade sit and let that runner do its job, and I will day trade out of other accounts. But if you're long and you've got it right, you really have to take a step back, take your profits, don't let the remaining piece turn into a loser. Get that remaining piece into what I call a free ride, and just back away. Just take a step back, understand that you're with the trend on that trade, and let the trend work for you. And that's what I'm doing with my 93s. Okay, that's all I got. Everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I will be back tomorrow morning with another webcast. Trade them well.